Guys, when it comes to luxury brands, the one at the absolute top, the pinnacle of the heap, undoubtedly is Hermes. Undoubtedly, the most exclusive, um, the most in demand luxury brand in the world. Hermes is the stock that we're analyzing today. And this isn't the first time we're analyzing Hermes. We spoke about it about 2.5 years ago. I believe I was in New York at the time and tried and failed to even get into a Hermes store. But the reason why we're talking about it is because Hermes, the king of luxury, is near buy territory. And we're going to take a look at its earnings and try to understand why this is such a juggernaut of a company. It's one of the absolute best companies in the world. And of course, I am salivating at the chance of adding this to my portfolio in a big way. This one surely is um, a main component, or should be a main component of your stock portfolio if you're so lucky to buy it at the right price. And when it comes to price, when we check out fast graphs, and of course you can check out fastgraphs.com to get more information on the fundamentals of some of the companies that we're looking at and that we analyze here at Zero. You see that Hermes has a normal P to E ratio of 42.63%. And its current stock price, you can see the stock price right here, presently at $216.24, is just above its historical PTE ratio. So that bodes well for us investors who want to get into this name in Hermes. And let's just take a look at its performance. As you can see, it has been consistently going up for, I think this goes back to 2007, 2008, around there. And it has been an absolute top performer over the past decade and more. But when we look at its performance in the past, let's say 4 years since 2019, we can see here that there's been a tremendous increase post the pandemic. There was a little lull in 2021 into parts of 2022, and then it has shot up from there. Um, Now, presently, the price has come down a bit, largely due to concerns about the strength of the Chinese market. And what that means for long term investors like me and hopefully like you is that this might be a great time to invest in arguably the best luxury stock, luxury company in the world. Um, so let's just take a look at its performance too in the past 4 or 5 years since the pandemic. All right. So when we pull it up, when we adjust the screen to just look at the 2019 to present performance, you see that the normal P to E ratio is actually 53.73%. That's the normal multiple. But right now it is at 46.67. So since that spike during the pandemic, this is one of the one, two, three times that we see that Hermes has become cheap relative to its historical PTE ratio and its PTE ratio in the past 5, 6 years. And I think this might be a great opportunity to buy, especially if it continues to de risk and go further. Um, what I'd like to do for you to understand just the epic um, performance of this company, let's take a look at its performance, its fundamental performance in more detail. And to do that, we're switching over to ROIC.com, which is another website that we use to monitor the performance of stocks um, in the long term. Yeah. When we hop over to ROIC, which is one of my favorite sites to look at the fundamental performance of stocks over the long term, we see first here that Hermes, they have a very consistent revenue growth. There was a little drop off in about 2019, 2020 era, right around here, which I suspect was largely due to the pandemic. But since the pandemic um, is actually increased quite substantially, the revenue growth, in a similar fashion, the earnings per share has also been growing quite consistently, and it's really amazing to see this level of growth, and it's a testament to the quality of management and the quality of this company to have such consistent earnings per share or profit growth. Um, Looking at some other important measures, we see that the operating margins of Hermes, the luxury king, being consistently above 30%, and in recent years it has been on average about 40%, which is quite remarkable for any company, much less a large company like this one. And I think that's one of the distinguishing features of companies in the luxury sector and some other sectors where they can have pretty high operating margins, right? Um, as a result of their high operating margins, um, it's no surprise that they also have a pretty healthy profit margin, averaging over 20% for more than a decade now, from the records that we have here on our OIC.com. And one of my favorite metrics to look at is the return on invested capital. And we see that the return on invested capital has been in the mid 20s, which is astronomical. When you consider that Warren Buffett and Charlie Munger essentially indicated or taught us that the long term stock returns that you're going to get is largely a function of its return on invested capital. Those two tend to equilibrate after a while. And so, based on this performance, we can expect that with the ROIC or return on invested capital of MS being this high in the 20s, that its performance will trumps what you would expect to get from the S&P 500 and basically any of the major global indices. And that is exactly what has occurred, in that if you owned MS for the past 10 years, you would have substantially outperformed the S&P 500, largely because of metrics like these, or its performance like these, with ROIC of well over 20% for an extended period. A couple of the other metrics that I like to look at is its basic weighted shares, to see if you're being diluted or not. And we can take a look at that here. And you could see that the share count has been pretty consistent. There's been a little fluctuation from year to year, but we're not in a case where the shareholders are being diluted. So that's a positive. And let's just take a look at the long term and short term debt obligations. I'm not seeing it in this region, probably because it's a foreign company. So usually it would indicate what are the debt levels of the company. I suspect that it will be very low, but I think that's some homework for us to follow up on to see what are the debt levels of Hermes. But all in all, with its earnings below its historical multiple, high return on invested capital, high profit margins, high um, ratios, operating margins. This is really an exceptional company, and I strongly recommend you add it to your watch list as one of the companies to possibly buy, if especially if it dips further. All right, signing out.